Welcome to Decentralized News, our weekly coverage of Bitcoin, cryptocurrencies, DeFi, and the macro news that affects it. Welcome in. This is Pyro DeBreeze, joined by my co-host Ozzy. This is not financial advice. Please do your own research, but let's get right into it. On this day in crypto, 13 years ago, on May 22nd, 2010, a man paid 10,000 Bitcoin for 2 Papa John pizzas. This is referred to as Bitcoin Pizza Day. It's also widely referred to as the first use of Bitcoin in a commercial transaction. So the big day.
Yeah, it's a huge day, but to think about how much he's paid for those pizzas, if he were to have that Bitcoin now, it'd be worth just shy of $270 million.
This was a developer that was interested in expanding Bitcoin. So making that first transaction maybe increase the value of the Bitcoin he currently holds. Who knows how much?
Oh yeah, there's definitely big stories. I was gonna make a joke about inflation and how, geez, we're really seeing inflation if that pizza is now worth $270 million.
What I was wondering about when I heard the story, so he put it like on a peer-to-peer, like a post. If someone will buy me these 2 Papa John pizzas, I'll give you 10,000 Bitcoin. And some guy used credit card, bought some Papa Johns. I think he had the Bitcoin first and then did all this kind of on trust. I wonder what he did
With that
10,000
Bitcoin?
Bitcoin.
Yeah.
It's like the guy who actually got the Bitcoin. I wonder what the story is behind that. I'd love to hear that.
Yeah, I wonder if he's sitting there rubbing his fingers saying, I knew I got that guy when I did that.
Yeah, or he had a lot to play with. Or who knows, maybe it's one of the lost Bitcoins. It was so early on, 2010.
Oh, yeah. Oh, so
But
cool.
anyway, there's a lot of news out of the U.S. or I'm U.S. centric, but it's just everyone seemed to be getting headlines. Janet Yellen was in the news. There was a story from CNN that they were talking to CEOs that more mergers may be necessary, implying that more regional banks will still be collapsing and mergers are the road forward for containing this banking crisis. So that story not really going away 100%.
Yeah, I'm not surprised that it's not going away 100% with the discussions that interest rates will stay at current rates for a while. That's our next story. There are still interest rate risks to a lot of regional banks, which maybe have less liquidity than some of these bigger banks. So I'm not really surprised. And considering that they probably don't want to run on the narrative of having to bail out the banks, mergers seem like the
Less
only way
scary.
forward.
Consolidation of the market, not as scary sounding as collapse.
Yeah, or bank bailout kind of discussion, which was originally going on.
Yeah, fair. We also had Jerome Powell in the news. He was giving a speech. He was live out talking about the Fed, not in the official Fed meeting, but really seemed to be changing his rhetoric in terms of interest rates. Everyone's expecting that they pause, but he seemed to back that up with his rhetoric recently.
Yeah, right now expectations are about 83% for no rate hike, and then about 17% for a potential rate increase. Surprisingly, no one is expecting a rate cut anymore. So that's interesting. And it's been moving more and more in favor towards no rate hike. We're still 23 days out, but
Yeah, a lot can happen.
yeah, we are seeing a pretty strong direction from the market on what their expectations are. Previous meetings, we've seen pretty divided expectations, and now we're seeing more and more consolidation in expectations, even essentially a month out from the meeting. So it's pretty interesting. It follows his rhetoric from the Fed meeting in May. He had softened his language quite a bit, so that is not surprising. We're also seeing economic data that sort of backs that up, although this week we're not expecting too much major news. We're waiting on GDP on Thursday. that also follows job claims and pending home sales. And then we've also got PCE on Friday. So not a whole lot of news, but GDP is definitely something to watch because GDP is the traditional indicator of a recession. So we'll see what that means moving forward.
And it seems like until he starts to talk about changing direction, anything besides a pause
Would be unexpected.
yeah, or how long is this going to go on? But it seems like the market seems pretty steady. This is gonna pause maybe for a little while, maybe over the summer, something like that.
Yeah, at least for the summer. Looking at expectations in July, they're heavily weighted towards a pause and holding rates through July. Although there's still about 31% that are saying, hey, maybe we might see a rate hike in July. September is where we start to see the divergence, with at least a quarter of forecasters expecting a rate pullback in September, and that number increasing in November and December. So with almost 86% expecting a rate cut by December.
You think it's a coincidence that they may start lowering interest rates as we head into an election year?
I don't know. I would say that there's maybe some indications, but I think some of the data is also helping that thought process. We're seeing housing is slowing down, not significantly, but it's slowing down. Jobless claims are staying steady. They're below last month by almost 22,000. We're seeing home sales slow down, although they were still above expectations. So we're seeing retail sales were half of expectations, but still positive, still growth month over month. So
yeah, if they pause over the summer, watching how inflation, what happens with that it's been sticky, but it's what, below 5% or right around 5%?
it's below, I think it's 4.2, somewhere around there. Yeah.
Yeah, so if it starts to creep up or go up quickly, or if it stays calm, but it's not at 2%, so
No, and they're expecting a slow pullback. That they're expecting 2 or 3 years for inflation to really fully run down. But if it does tick up, or if spending does seem to get back out of control or anything like that, then we could see them continue to hold rates. And he is still holding that line on, we're pausing, but it doesn't mean that we're not holding rates.
We can kind of move on from the Fed, but yeah, it'll be interesting to watch, see how this summer plays out. Biden was at the G7. Crypto came up. It's all over Twitter, but I watched the comment and just seemed like general FUD. But in the debt, they brought up the debt ceiling talks going on in the United States, and he brought up tax cheats in cryptos. I'm not going to accept any deal, but just the fact that in this high stakes game at a G7 conference, and the looming kind of debt debate that's going on in the United States, if and when they're going to raise the debt ceiling, seems more like when, how. That just the fact they brought up crypto again.
Yeah, he's specifically talking about crypto tax loss harvesting. So the ability to claim a loss on a cryptocurrency to offset capital gains, and they have to be done within 30, like after 30 days. And so he's talking about how that is, we need to eliminate that rule for crypto in the aim to increase tax revenue for the U.S. government by about 40 billion, saying about 18 billion is related to crypto, and then the rest is regarding a similar rule on real estate. So it's crazy. It's building this greater campaign from the White House against crypto. in the US and trying to build an anti-crypto narrative and that crypto is hurting the US. He very much
I don't buy the trying to increase.
it definitely doesn't make sense.
They're more pushing it away because like a 30% tax on mining, it's not going to increase tax revenue. It's just the miners will leave.
Yeah, they don't realize that it's not like traditional assets, and so they're really trying to push that tax narrative, but really they're just going to pull that revenue away from the US. And they're doing it by putting it in opposition of food assistance programs. They're really putting it in like a no nonsense.
Right. Yeah, it's just they're no holds barred in terms of the rhetoric they'll use to make it look bad.
Yeah, they're trying to put it in front of a traditional voter's eyes who doesn't really know anything about crypto and make the most sense possible for them to buy into this proposal, whether it's
simple.
Yeah, whether it's closing these tax loopholes for crypto traders or talking about how North Korea is using cryptocurrency theft to fund half its missile program. So we're seeing these narratives come out of the White House, whether it's national security. We talked about the inquiry about Bitcoin and how it affects national security through its use in El Salvador. And now we're seeing the White House claiming that it's funding cryptocurrencies funding North Korea. Even though when we look at the story, there's not really a lot of substance to the claims or linking it to the missile program. They're making these claims that this is the case. And so we're seeing a really growing narrative out of the White House that is anti-crypto and using any means that traditional voters would understand to build up an anti-crypto sentiment within the US.
They're kind of seeing this in the world organization because like Argentina, when they were renegotiating their debt or with their inflation, they had to like kind of ban crypto officially purchases in their country. And then there's this story out of Pakistan. I know I'm jumping all over the place, but Pakistan says it was going to ban crypto and never legalize it in the country. And it also stated that this was a requirement of the Financial Action Task Force, which was related to this gray list about money laundering and anti-terrorism stuff. And that currently Pakistan is engaged in renegotiating with the International Monetary Fund over bailout negotiations. And a favorable report from this Financial Action Task Force.
Essentially, the IMF is very anti-crypto, and the IMF is controlled by the US, and so the US is pushing their narrative onto other countries through the FATF and the IMF, and basically saying they're not going to bail these countries out or help them out with their inflation and debt problems if they don't follow the US narrative. And this kind of goes along with the US dollar doomsday discussion about BRICS and everyone moving away from the US dollar. USDC, which we talked about last week, has allocated $8.7 billion to repo as a insurance against a US default. We're seeing Venezuela and Iraq either ban or abandon the use of the US dollar for economic transactions. And then we're seeing a story that says from Bloomberg that predicts the collapse of the cryptocurrency industry if the US were to default on their debt. So the US is essentially trying to strengthen the hold in the US dollar through the IMF and FATF. And we're also seeing other countries move away from the US dollar and join BRICS. And so we're really seeing that dichotomy of moving away from cryptocurrency. As we have been, XRP has just launched a platform for issuing CBDCs and stablecoins, and many are in talks that Ripple is working with BRICS on the development of their own currency. So that partially potentially explains the lawsuit against Ripple. Is essentially Ripple is working on the US dollar competitor, and with their new platform for issuing stablecoins and CBDCs, they're getting more and more ready for that as more and more countries join BRICS and move away from the US dollar. Even then, we have seen a surge in XRP pricing. They've jumped about 7% after the court rejects an SEC motion against Ripple. And we're seeing more and more discussions about the Ripple case finally coming to a close within the next couple of weeks. So the US dollar doomsday, XRP, and what's going on with Pakistan, even though they all seem like disparate stories, are all interconnected. So very interesting.
Not lost in the United States. We had Robert F. Kennedy Jr., the nephew of JFK, speak at the 2023 Bitcoin conference.
Bitcoin Miami.
Yeah, so he talks about Bitcoin as like an exercise in democracy and just how important it's like almost the exact opposite. So it's just nice to know that there are dissenting views. Now, if you're not familiar, Robert F. Kennedy, he is like the number 2 in the Democratic primary. So it's hard to imagine if Biden wants to run that he will not be the candidate. There's no one has ever taken an incumbent out. However, a popular primary challenger does make it hard for the Democrat to actually win the election. It does hurt their chances to win the election. But I'm not rooting for anyone in particular, but just to know that there are people inside the Democratic Party that are very pro-Bitcoin. And he gave a nice speech. He's fun to listen to. It's hard to tell with politicians how much is rhetoric and how much is reality, but it's still refreshing. But he will be accepting Bitcoin donation, which goes to say, oh, is this a ploy just for more money, or does he really believe these things? It's hard to ever really know with politicians, but it is very refreshing. And then there was also another presidential candidate, Vivek Ramaswamy. I'm not too familiar with him, but he will also be accepting Bitcoin for campaign donations. So it's just really interesting to see how center stage, both in world politics, you have Biden at the G7 talking crypto, which is different than Bitcoin, in my opinion. And then you have major presidential candidates accepting Bitcoin and speaking to it. So it's just interesting to see how far it's come politically, how much more involved Bitcoin is.
It's incredible to see just how much it's actually joining the national discussion. We didn't really hear about it in the last election at all.
Not at all.
And now we're seeing it more and more.
To raise money as well. And he hasn't really come out and said anything in particular. I'm pro. He's always just like America first. His comments have been in general, if it's not the dollar first. That's his mantra. But he can change his mind. So who knows?
Yeah, with Vivek Ramaswamy, it's very prominently on his presidential page. I clicked his link, and right on that right hand side, it doesn't say donate, it says donate Bitcoin. Pretty prominent, although it does come on the heels of RFK Jr. said it first. So
yeah.
Kind of interesting to see that move. But you're right, the US is still doing something to enshrine the right to protect cryptocurrency, to own cryptocurrency. Texas, or one of our big pro-crypto states in the US, is moving towards enshrining the right to own Bitcoin, but also other cryptocurrencies in the state bill of rights. And so
any currency, and just includes Bitcoin. But yeah, they're just like freedom-minded state of all the states, libertarian in a way. But they're just like, no, you can't infringe on anybody's right to use any currency they want. And it passed 139-2. It was just this one step in actually enshrining it in the Texas State Bill of Rights. It's still got to get through one more vote in the House, and then it's got to go to the state Senate, and who knows what from there, and eventually to the governor's desk. But 139-2, that's pretty overwhelming.
Yeah, and it is part of this larger movement that we're seeing in some states. Texas banned the CBDC alongside Florida. We're seeing other states, including Arizona and a whole bunch of kind of middle states. We're talking about the Dakotas and other things and other states like that, all protecting Bitcoin or cryptocurrency adjacent activities within their own states. So that's pretty interesting. But we're still seeing the shift of companies away from the US. Strike has expanded their services from 3 to 65 new countries and has also relocated their global HQ to El Salvador. So they're
Yeah, they went from only being in the United States, I think Venezuela and El Salvador, and they're like, all right, we're going to expand 65. That's a big jump, 3 to 65. But yeah, and with that move, they're taking their headquarters from the United States. They were out of Chicago. I love listening to Jack Mallers speak. He's pretty inspirational as far as Bitcoin goes. But yeah, too bad to see them feeling like they're forced to move to El Salvador or just wanting to be in a more friendly environment. Who can blame us?
they're saving millions in taxes by moving to El Salvador because of the tax breaks that El Salvador has given to new AI and tech
Right.
businesses there. But it follows a bigger move being made by a lot of companies in the US that are uncertain of regulation within the US that are moving towards South America, especially. Bermuda seems to be a very popular location. And we're just seeing that shift of companies, that outflow of companies outside of the US now, leaving the US and moving elsewhere. As regulation becomes, uncertainty becomes more and more pressing.
Yeah, it is. It's pressing and depressing in terms of U.S. being here. But one of the outcomes of this pressure from U.S. regulators has been the growth in Tether compared to other stable coins in terms of their market share. Like USDC has gone down and Tether has gained because it's offshore, right? Billions. But this was really, I thought this would be such a huge story. But I don't
If
know.
it
It's
were the
just,
bull market,
yeah,
everyone
it's
would
just,
be buying a ton of Bitcoin right now. Tether
but
has
yeah,
announced that they're going to use up to 15% of their profits to buy Bitcoin. To give you an
right.
idea, in Q1 of 2023, they made about $1.5 billion. So that's about $225 million into buying Bitcoin if they
Per
bought up to
quarter.
that 15%. So that's an insane amount of buying pressure into
Yeah.
Bitcoin if they really follow through with this announcement.
Yeah, I imagine they will. But yeah, and it's also just a moving away from treasuries and diversifying into Bitcoin, which they see as long term going to be there. I think it's
Back
one to just
USDT with Bitcoin rather than treasuries.
or just as in they're doing it with revenue. It's just an additional like leg of support, but it certainly is fascinating to watch. You have this reoccurring buy going into Bitcoin potentially, which could stabilize the price, and it's a vote of confidence from big stablecoin, and maybe others will follow.
Potentially. Some one company that did not get a vote of confidence this week was Ledger. The Ledger
Yeah,
controversy's probably been buzzing in the space for the last week or so, but
I've enjoyed watching this kind of play out in the different. I don't want to say battle lines, but just it's just an interesting debate. Is it a big deal? Is it not?
yeah, it's been a debate that I've been part of a few times now. And for anyone who isn't aware, Ledger has announced the Ledger recovery system, which allows users to shard their seed phrase and have it sent and encrypted at 3 different companies. And if they were ever to lose their seed phrase, they could then recover it through the Ledger recovery service. And they would have to go through 2 or 3 different verification steps in order to get access to their seed phrase again. So then they don't totally lose their crypto. This is an opt-in service, not an opt-out service. But it caused a lot of drama on Twitter, and Ledger's poor
Yeah.
PR did not help that scenario.
No, they made some crazy statements that they deleted. But so for the purist, it's like, you're telling me someone else has my keys. It's 3 different companies. It's sharded out. But basically, someone could come to them and say, oh, it's national security. We need to freeze this account or whatever. And it's possible now. Basically, your keys are not just your own. They're not
Only
just your keys. They're
if
somewhere else.
only if you opt in. Only if
But
you opt in.
But that's one of the crazy things, or one of the deleted tweet or whatever, was that if it's not an open source code, they could put that in the firmware. You're trusting them not to put that in the firmware in the first place. So it just brings up this idea that if you want to truly own your own keys, there's some research to be done. You got to find open source, maybe Bitcoin only, peer reviewed. There's a lot goes into it. And quite frankly, that's one of the interesting things about the debate, is that most people don't want to do that. They want their recovery seed to be, they want another option. If they lose it, they can go to the company that they trust and say, hey, I lost it. Can we recover it? I want to opt into that. So it's like, if you want to be your own bank and truly do peer-to-peer, like, you're responsible for your own security. Not everybody wants that. And the next billion users, what percentage of them want that?
I know so many people
Less
that
than the
don't use
first.
a ledger or don't use a cold wallet because they're
It's too
worried about
complicated.
it. Yeah, they're worried about having to remember their seed phrase or anything
Right.
like that. And so I
So
think
if out of the first million users, there's already, not everyone even wants to do all the security. Imagine the next 100 million users. They're going to care about it even less. Yeah, it's been interesting to watch the whole debate unfold.
it's definitely in many ways against the crypto ethos of not your keys, not your crypto, you're your own bank. But in other ways, when we talked about this pretty in depth on Not Crypto Bros, in order for people to be able to onboard, you need these kind of features because imagine your email. If you forgot your email password, you lost total access to your email, which is in some parts like your total identity, and you couldn't recover it. You would feel pretty crap. Or
Yeah.
your Instagram account or your Twitter account, any of those things, you couldn't recover them. And those don't even have necessary, for some people, they have monetary value, and for other people, it's just part of their identity.
And quite frankly, like, taking responsibility for your own security over in a new realm is technically very different for people, not how they're used to imagining money. It's a scary prospect.
Absolutely. And I'm going to jump to Tornado Cash. I think Tornado Cash was another victim of the US government's attack on crypto earlier this year, or I guess late last year, really. And they were subject to a hack on their DAO. The attacker put up a proposal for governance, and they essentially allowed them to steal votes and have unnecessary control of governance through malicious code. And this was approved by the DAO.
I guess they approved it, and then there was something because of the maliciousness of it. Then once it was approved, he was able to change it or something.
He was able to change and a bunch of things. He was able to withdraw about 10,000 votes as Torn, which is the Tornado Cash DAO token. He then sold it all. He then minted about 1 million Torn for themselves, which is worth just about 4 million at the current prices, and also sold at least some of that. It was not an exploit of the smart contracts or the technology. It just has to do with the governance protocol. And so this is showing still some of the weak points in crypto. The prices slumped quite hard on Torn after almost 40% in 24 hours because of the attack. And then the hacker has kind of talked about giving back control of the DAO and the governance protocol. There's been several proposals now to basically revert the changes to the governance structure.
So the hacker is pumping his bags, like pumping the token back up, like
potentially that's what
pretending
people are
he's going to give
talking
it
about.
back and then he's just going to sell them.
That's what some people are saying, is he's just potentially pumping his bags and then just to dump it again. But
It's hard to. I wonder if this protocol this DAO will survive this. They're already like under attack just for being what they are, washing money for money laundering. It was hard to imagine them surviving anyway.
yeah, I mean, we've seen a major decline in hacks overall in the first quarter of 2023, sitting well below 500 million, but which is down from the almost 1.3 billion in Q4 2022. But yeah, it's still possible that we continue to see hacks like this as governance infrastructure evolves and as smart contracts evolve. So still some flaws in crypto, but also showing ways that we need to evolve and improve as a community and as an organization. The last story that we'll touch on is BlackRock trading Pepe. This was the hype that was going on around crypto Twitter in the last week, as there was a bit of a slump and then a bump in Pepe again, as they tried to rebring that energy and that hype. There was rumors, which are now proven to be unlikely true, that Pepe was being traded by BlackRock.
Which did sound a little silly on the surface.
Yeah.
I saw that this came out, and it's from Look On Chain, and he puts out some really good information sometimes. And he's the one who came back and said, "Hey, after looking at this again, they maybe just changed the name. BlackRock is not necessarily anything official." And when you look at their rhetoric, it's like they barely say anything nice about Bitcoin, let alone it would be shocking if they were into Pepe.
Yeah, it alleges that the original tweet alleges that on Thursday BlackRock withdrew 1.3 trillion Pepe from Binance and moved it to 4 different wallets, and they all assumed that they were created by BlackRock. The reason why everyone assumed they were created by BlackRock is the wallet that was associated with it was blackrock.eth. The blackrock.eth domain has the same name, the same spelling as the BlackRock company, but is likely just someone who bought the .eth domain. And so I think that rumor is unfortunately untrue, and Larry Fink...
Unless they come out and say, yes, we did it, or that they own this BlackRock.eth that you're speaking of, which, seems unlikely.
It seems very unlikely, especially considering Larry Fink, the CEO of BlackRock, is well known for his anti-crypto rhetoric. So it was probably a rallying cry to try and keep the rally going on Pepe, but it's seen already a 5% decline over the 24 hours, and it's continued to drop pretty sharply from its peak on May 13th. So
yeah, Pepe's got an uphill battle. It's already broken. It's broken down, and it doesn't have an Elon Musk pumping it like Dogecoin.
Elon is what pumped it towards its last all-time high.
He is the meme lord, so I guess he could still play around with it. So I don't know.
Yeah, but we're looking at the all-time high where we've already fallen over 50% from that all-time high, at least on Binance. So it's
maybe it'll have a second life after we get into the real altcoin season, maybe next year or sometime.
Yeah, but
a little bit of a boost.
Yeah, but it feels pretty unlikely that we see new highs on Pepe, even though it had a very good couple hours at one point following the initial news. But it's fallen right back down. So doesn't look like BlackRock is really trading Pepe.
Well, before we close today, I just want to encourage everyone to go out there and buy some pizza with your Bitcoin in honor of Bitcoin Pizza Day and the 10,000. We won't have to spend 10,000. You can support the network. Anyway, thanks for listening to Decentralized News. We post to YouTube first, so please consider subscribing to catch the videos as soon as they drop. Our goal is to provide unfiltered content that will help foster genuine discussions that help the entire space grow. Please remember, this is not financial advice. We are not financial advisors. The show is presented for educational and entertainment purposes only. Please do your own research before making any investment decisions. Thanks for your support and stay tuned for the next episode.
Bye.